This month was my highest month of dividend income ever, and in total, I received a dozen payments from some of my favorite companies like Lowe's, SBUX, and Proctor and Gamble. And in this video, we're gonna go through each of those payments and add them all up so you can see all of my dividend income for the month and also show you my total income received so far in 2023. But before we get to that, in case you're new to the channel, my name is Ryan, and here we strictly talk about investing in dividend stocks, which I think is hands down the easiest way to create passive income. Every week, I'm coming at you guys with new videos, most of which are reviews on different stocks, and I also share updates into my own portfolio that I've been building for about 4 years now. But anyway, if you love dividend stocks, and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Speaking of which, leave me a comment below and let me know which stocks paid you a dividend this month. I'd be curious to hear if we have any of the same ones. Anyway, the first payment that I received this month came from AT&T, who paid me $28.19, which was a fantastic way to kick off the month. And if we take a look at my AT&T position on my dividend portfolio tracking spreadsheet, which you can start using for free, there is a link to download this in the description of the video. But anyway, here we can see I have 101.5 shares of AT&T at an average cost per share of $21.60. And if we slide over here, taking a look at my return, right now I'm down 25%, which makes AT&T my portfolio's second biggest loser. But with that, it is also one of my highest yielding positions. Jumping over to the dividend stats, AT&T's forward yield is coming in at 6.85%, so that's very high. But otherwise, I don't think there's really anything here to write home about. They have a negative 5-year growth rate and now 0 years of growth after they reduced the dividend following their spinoff of Warner Media last year. At any rate, moving on to the next dividend payment I received, this second one came from the other telecom company in my portfolio, which is Verizon, who paid me $29.17. Not too different from that AT&T payment, but with these both combined, we're looking at a total so far of $57.36. And despite seeing a nice 10.5% surge in share price just this last month, which is a real crazy gain, Verizon is still the biggest loser in my portfolio. And if we take a look at my position, right now I have just under 44 shares at an average cost of $51.40. And if we slide over looking at the return, guys, I'm down even more with Verizon than I was with AT&T. I'm down 27%. And along with AT&T, Verizon is also one of my higher yielding positions. As we can see, their forward yield right there is 7.11%, higher than what we were getting with AT&T. And I think overall, these dividend stats have a lot more to offer, both in terms of that yield and also the dividend growth. I mean, there is some dividend growth to speak of here with a 2% 5-year CAGR, nothing crazy, but it is there. And they've also been growing this dividend for the last 19 straight years. So overall, I do think this is looking better than AT&T. Anyway, moving on to this third payment I received in November, this one came from JEPI, who paid me $7.92, bringing my total so far to $65.28. Now, I don't have a huge JEPI position at all, guys. As we can see, I only have 22 shares at an average cost of $60.22. And if we slide over looking at my return, it looks like I'm down about 9% with JEPI right now, just in terms of share price. But if we include dividends in the calculation on a total return basis, I'm still up 6.4%. And if you saw this recent video of mine from a couple weeks ago, you'll know that JEPI is actually on the chopping block in my portfolio. And so are AT&T and Verizon, actually. I'm planning on selling out of all of these at some point. And so this could be one of the last dividend payments I ever received from JEPI. I'm planning on selling out of this position sometime before the end of the year. And if I do, I'll definitely keep you guys posted on the move. And now, guys, this brings us to payment number 4. This one came from Lowe's, one of my favorite dividend kings. Lowe's paid me $17.15 in November, which brings my total so far to $82.43. Now, as you can see right now, I have 16.4 shares of Lowe's at an average cost of $194.50, which is really not too far off from the current share price. And if we scroll over here looking at my return, I'm only up 2.35% right now. So I'm decently close to breaking even right now with Lowe's, and I might actually add some more while it is close to my average cost, even though Lowe's is already one of my more portly positions, currently making up 6.81% of my portfolio. And right now it is my 6th largest position behind others like Williams-Sonoma, Johnson & Johnson, Realty Income, Proctor and Gamble, and SBUX, many of which also paid me a dividend this month. And we'll talk about those momentarily. But first, moving on to payment number 5, this one came from EPD, Enterprise Products Partners, who paid me a whopping $43.42, our biggest payment so far this month, which brings my total so far to $125.85. And out of the few stocks we've talked about so far, EPD is the best performer out of the bunch. Looking at their share price performance in the last month, EPD is taking a little bit of a loss. They are down 3%, which is contrary to a lot of other stocks out there who are actually seeing pretty substantial gains. But zooming out, looking at their year-to-date performance, they're still up 10.36%. And you know we've got to mention this company's delicious dividend yield coming in nice and high at 7.48%, which when added to their share price return puts them at about an 18% total return just this year. And if we take a look at my position, right now I have 85.5 shares of EPD at an average cost of $23.05. So scrolling over, looking at my return, guys, it's doing pretty well. Right now I'm up 16% just in terms of share price, but including dividends in the calculation, on a total return basis, I'm up 35.7%. This is one of my better performers. But anyway, moving on to payment number 6, this one came from Realty Income, the monthly dividend company, who paid me $16.67 this month. Those payments are starting to get up there from Realty Income, but anyway, this brings my total so far in November to $142.52. Now, looking at their share price performance, Realty Income's seen a really nice rebound this last month. They're up nearly 9%, and then zooming out, looking at their year-to-date performance, they are still taking a loss. They're still down 15.5%, and right now, if we look at my position, I'm still down just a little bit on Realty Income. I have 66 shares at an average cost of about $55.50 per share, so that's not too bad. With a current share price of just under 54 bucks, scrolling over, it looks like I'm down just under 3% with Realty Income, so really not too bad, and on a total return basis, I'm still in the green. And then next up, guys, we've got a payment from another monthly payer, Main Street Capital Corporation, who paid $9.23, bringing my total so far to $151.75. And Main Street's also seen some really solid performance. In the last month, they're up 5.6%, not too shabby, and then zooming out, looking at their year-to-date performance, it's even better, up 13.76%, which when added to their near 7% dividend yield, puts Main Street at about a 20% total return this year. They've just been absolutely crushing it. And then looking at my position right now, I have 39.25 shares of Main Street at an average cost just under $39 per share. So I'm up a little bit right now, nothing too crazy. I'm seeing about a 6% gain in share price, but on a total return basis, this is looking a lot better, closer to about 24%. Anyway, moving on to payment number 8. This one came from Proctor and Gamble, who paid me $24.50, bringing my total so far to $176.25. And Proctor and Gamble is another one of my favorite dividend kings, and overall one of my favorite companies. I just can't get enough of this stock, and with that, it is one of the largest positions in my portfolio. Right now, I have just over 26 shares of Proctor and Gamble at an average cost of $138.87. So I'm seeing a nice gain right now. It looks like I'm up about 9%, but on a total return basis, I'm up more like 13.7%. And like I said, this is one of my largest positions. It's my second largest, actually, just behind StarBucks by hardly any amount at all, by 0.05%. These two are neck and neck. But anyway, guys, moving on to the next payment, this one came from AbbVie, who paid me $14.88. Not too shabby, and this brings my total so far to $191.13. And AbbVie is really not having a great year. If we look at the performance, just in the last month, they're down pretty close to 5%, and then zooming out, looking at their year-to-date performance, they're down 14.6%. And since AbbVie has been coming down in share price, that dividend yield is on the rise, and right now has AbbVie looking like a triple threat in the dividend department. Not only does the stock have a high yield of about 4.5%, but that dividend growth rate is on fire there in the double digits at 10.5%, which they've continued to increase for the last 10 straight years since the company was spun off from Abbott Laboratories back in 2013, and Abbott itself is a dividend king. Anyway, looking at my position right now, I have just over 10 shares of AbbVie at an average cost still quite a bit below the current share price, $114.20, which means I'm still seeing quite a nice gain. I'm up 21.4%, and on a total return basis, I'm up more like 33.5%. This has been doing really well for me. And with that, guys, that brings us to the 10th payment of the day. This one came from Apple, who paid me a whopping $1.59, which brings the total so far to $192.72. And while Apple's dividend payments are truthfully never anything to get excited about, the share price performance, on the other hand, is a completely different story. And as we can see, just in the last 30 days, Apple has seen a tremendous gain in a very short amount of time. They're up about 10%. And zooming out, looking at their year-to-date performance, this is even better. They're up 52% so far in 2023. Looking at my position real quick, I have 6.6 shares of Apple at an average cost of $129.45, which is really sweet. And if we scroll over, guys, the share price return and the total return are going to be pretty similar. We've got 46.75%, 47.5%. Let's call it an average 47%. But either way, it makes Apple one of the best performers in my portfolio. And with that, guys, we are now at the 11th payment I received in November, which came from the top dog in my portfolio. We're talking about StarBucks, who paid me an even $22, officially putting me over the $200 mark for the month, currently sitting at $214.72. And as far as share price performance goes, Starbucks has had a really strong month. They're up 8.6% in the last 30 days, but zooming out, looking at their year-to-date performance, this is not as impressive. They're only up 2%. At any rate, my Starbucks position is sitting pretty. I have 38.6 shares of this company at an average cost that's just a hair below 90 bucks. And if we scroll over, looking at my return, it's doing really well. Just in terms of share price, I'm up 14.25%, and on a total return basis, basis, it's looking closer to 20%. Anyway, moving on, this brings us to the last payment that I received in November. This one came from Williams-Sonoma, who paid me $16.20. And Williams-Sonoma has easily been my best performer this year. Looking at their share price performance, they're up 16.7% just in the last 30 days. That is crazy. And then zooming out, looking at their year-to-date performance, they are up a whopping 61%. Now, considering this is the most recent addition to my portfolio, I started buying Williams-Sonoma, I think back in June of this year. I'm absolutely blown away at how it's performed so far and how my position is just taken off. Right now, I have an even 18 shares of Williams-Sonoma at an average cost just about $133 per share. And looking at my return, both in terms of share price and total return, I'm up about 38%. Very solid. But anyway, with that Williams-Sonoma payment, guys, that brings my total dividend income for the month to $230.92, which is a brand new record. And we've surpassed the old record of $217.19, which came exactly 1 year ago, actually, last November. And this year-over-year difference represents a 6.3% gain. Not too shabby. And with that, my dividend income so far this year is officially over the $2,000 mark, which is the first time this has ever happened. And to be exact, we're sitting at $2,037.74, which is a near 26% gain compared to my year-to-date income in 2022. Really making some great strides in the portfolio. And the best part about this, guys, is that's basically $2,000 that I was paid for doing absolutely nothing besides owning shares of these companies that we just went through, many of which are, really nothing fancy, like StarBucks, Lowe's, Proctor and Gamble. And that's why I love dividend investing and think that it really is the easiest way to create passive income, to create money that you don't have to lift a finger for. With that in mind, like I always say, this stuff doesn't happen overnight. Building wealth with dividend investing is a slow burn, and it's taken me about 4 years to reach the point that I'm at today. But in this game, time is your greatest ally, and this is one of those things that just gets better the longer you do it, and you can see that from this chart here. But you have to be consistent. It's not about timing the market. It's about showing up every single week, in every single month, continuing to contribute to your portfolio and reinvest your dividends year in and year out. You build this thing brick by brick, step by step. It can be kind of a grueling process, but it's totally worth it. And today, right now, you can lay that first brick and you can take that first step towards reaching financial freedom. But anyway, enough rambling on my part. Now that we've taken a look at all of my dividend payments from this past month, I want to switch gears and show you which companies are going to be paying me in this upcoming month here in December to close out the year. And to do this, we are going to be using the payout calendar tool on the dividendtracker.com, and you can start using the dividend tracker for free. There is a link to check out this platform in the description of the video. But anyway, here are all of my dividend payments that I can expect to receive in December. Starting at the top here with SCHD, this is going to be a really nice payment, coming in at about $31, and then Johnson & Johnson's not too far behind that. We're looking at about $29 there. Then we have $20 from both Chevron and Main Street Capital Corporation, along with $17 or so from Realty Income. And then we've got Snap-on not too far behind that, $16.70. Southern Company, $12.50. Coca-Cola, about $10.70. We've got a special dividend coming from Blue Owl Capital Corporation, $9.31. I will take it. And then last but not least, we've got Jeppy here at $7.92. And if we scroll down looking at the total, I should be bringing in about $173, $174, somewhere in that range. So overall, it's going to be a pretty solid month. And then looking at how this is broken down week by week, this first week is going to be pretty moderate. We've only got 3 payments coming in from Jeppy, J&J, and Southern Company, totaling about $50. And then the next week's going to be a bit more hefty. It looks like there's 6 payments coming in the second week of December, with the heaviest day being here on the 15th, about $46 just for that day. But in total for the week, should be looking at about $83. And then the third week's going to be a bit lighter. We only have that SCHD payment. And then we'll close out the month of December and close out the year with that last payment there from Main Street Capital Corporation. And with that, guys, if you're in the market for some cheap dividend stocks, then check out this next video right over here where I'm telling you about 3 of them, all of which look like great pickups as we head into this month of December. So click right over here to check them out, and I'll see you in the next one.